Hello guys, welcome back to my channel. This is Soji and you are welcome to Soji FOREX. Basically what we do on this channel is that we share ideas about the financial market. We backtest strategies, and after discovering how profitable it is, we come to share with you on this platform so you can leverage on it. And what that means is that you don't need to go through the extraneous stress we go through to come up with the diverse strategy, with the tricks behind it. We go straight to share with you the risk management of it and the advantage of the strategy. So today in our previous video, we've highlighted more on boom and crash, and today we are looking at how we can take advantage of this in trading step index. So our focus today basically is on how we can trade step index. Want to look at how we can trade step index. Okay, so let's go to our chart and see how we can take advantage of this strategy in order to be profitable in trading step index. Now, one thing we must know, if you look at my chart, you realize that I have boom 500, crash 500, crash 1000, boom 1000, and step index. What it simply means is that you can pick some particular assets and then get yourself accustomed to those assets, work on it, master it, and even without anything, with a glimpse of it, you can predict the outcome of the market. Why? Because of consistency. You are used to it. You get to know the behavior of that market. Same way when you stay with an individual over time, you can predict or you get to know the lifestyle of that individual. To some extent, you can predict the person, although it's a game of probability. Same thing is applicable to the financial market. So you don't need to trade everything in the market to make you profitable. You can get 3, 4, 5 assets, master those assets, focus on those assets. The game is not how many assets you trade, but the game is how many profitable trades you were able to take and to make. So that's for it. So let's dive back into what we are considering today. We are looking at how we can trade step index and taking advantage of those trades. So number one, we pay our attention to our main chart. And referring to our main chart, we have an indicator on the chart, and I am referring to this indicator, our Bollinger band. It is a special Bollinger band for me, and the period is period 130. That's the Bollinger band you are seeing with this green line. And we've established in our previous video that whenever price approaches the zone of this upper Bollinger band, or probably piercing it in an upward move, is showing us a possible exhaustion point. It's showing us a possible exhaustion point. Most of the time, if you are someone who trades smart money, like I do combine some of my strategy, whenever I see a market piercing either the upper Bollinger Band, I begin to look for the nearest order block. I begin to ask myself, is it in an order block? Please, if you don't know what order block is, you can refer to our previous videos on this channel where we have discussed order block. So I begin to imagine, okay, price is now at the upper Bollinger Band, showing an exhaustion towards a buy direction, which means there is a tendency of a possible pullback towards the downside. Then what do I need to do? I begin to look if there is a possible order block at that region or a liquidity sweep, as the case may be. So I can go to a higher time frame to see if there's an order block lying in that region, or there's an institutional movement. And here I have one of it. I have this explosive move of this bearish candle, which is a sign of an institutional move. So having established that, because I know that retail trader cannot move the market in that direction, I have a confirmation. And also looking at my 1 hour time frame, can see that price have pierced the upper Bollinger Band to some extent of exhaustion. Coupled with that, my confirmation, then I return back to my 15 minutes. As the case may be, yours can be 5 minutes, but I prefer 15 minutes to reduce the noise of the market. So I always return to my 15 minutes, and then I begin to think of the possible thing that can happen. So having returned to my 15 minutes, I will come to my indicator window, my indicator window 1, and then I look at my stochastic oscillator, having observed that my stochastic oscillator has been above the 90 level, which also confirms that there is a possible exhaustion, and my moving average 10 as well is at that region. Then I begin to look for a cross of price below my moving average. I see that the stochastic crosses this region. Okay, the stochastic crosses my moving average 10, and then one more indicator is our moving average exponential 10. That is it. And then price closes below our moving average exponential 10 on the chart. That confirms our entry. So you make your entry, your stop loss is above the previous high. Stop loss is up there, and then you let the market to do his or her own thing, as the case may be. Then another important factor, that is for a sell. And then another important factor you need to look at is you consider the gap between, on your indicator window, always consider the space between your stochastic oscillator and your moving average 10. The more this space you are seeing in between them, the more the force of pushing the market in the direction it was going before. Like for example, remember, looking at our main chart, we have this push to the downside, and then when you look at our indicator window 1, you see that there is a cross between the stochastics and the moving average, and you see that there is a space in between them. You can see this gap, because for a reversal to occur, these two indicators need to begin to merge. Like what you are seeing here, you see they begin to come together for a reversal to occur. So when you see these two indicators far apart from each other, it means the market still have a long way to go. Okay, it's a sign of continuation. And another thing, secondly, we say that whenever the market is at the upper Bollinger, is above the middle Bollinger band, which is this green line you are seeing, it is established that we are in an uptrend. So you are looking for a possible trend continuation trade in that direction. You can get more details from our previous video. You can look at a possible trend continuation, and we said you will need to wait for price to approach the zone of the middle band, and you see that this price approaches the zone of this particular middle Bollinger band, and after price approaches it, you wait for price to close above the moving average with a cross of our indicator window 1, the stochastics and the moving average 10, and then you will ride it to the upside. These things are pretty simple. It's happening everywhere. You can see here, price pierces our upper Bollinger band, closes below, giving us an exhaustion. And if you are someone who is accustomed to support and resistance, you can as well draw your support and resistance line first, and then whenever price is at the upper Bollinger band or the lower Bollinger band or the middle Bollinger band region, you confirm if the price at that zone is in agreement with your support and resistance zone. If price is either at the upper Bollinger band and it is at your resistance zone, at the middle Bollinger band, either resistance or support, and at the lower Bollinger band, it is also at your support zone, then you look at your indicator window. So you are not just trading in isolation, you are combining price action, depends on what you are trading, and then the indicator now to have a confirmation of your entry. Okay, and then you see that beautiful move. Now look at this place. We are talking about how it has to be from the lower Bollinger band. Remember, anything you do, you make reference to this Bollinger band due to how special, how proven, how successful it has been. You can see price pierces it. Looking at our indicator window, you can see as well this cross at the level of our 10 level. Price closes above the moving average 10. You make your entry. Your stop loss is at the previous low here. Your entry, and then you are riding all the way up. Do you get? So this strategy is simple and powerful. Here we have another one. Here we have a push to this side, and then you can see price rejection from this zone of our lower Bollinger band, and then price begin to push to the upside. Then we confirm it with our indicator window. Okay, now at this zone you would have gone to your 1 hour to have marked this zone on either your 1 hour, 30 minutes, to have marked this zone either as an order block, either as a support, or either as a resistance, or there is an improper price action around that zone, then you come and wait for it. So once price return to that zone on your lower time frame, the M15, and then you notice it's close to your band region, it means either a reversal or a continuation is imminent. And from there you can see how beautifully this move is. So this strategy is pretty simple and it is straightforward. Please, I want to celebrate and say thank you to all our new subscribers. If you are getting value from these videos and the content we are sharing on this channel, please do not forget to click on the subscribe button, turn on your notification bell so that you'll be the first to get notified whenever we publish our next video. And also do not forget to like, share this video with your friends and with your loved ones. Then here is another one. These things are pretty simple and they are happening everywhere. You can see price piercing our upper band. This should be a zone. Either a support, the resistance, another block, an improper price action. And then you need to find one of those things to combine it, not just an indicator. And your confirmation is the fact that your indicator window is at the level of 90. You wait for this cross. Now you can see that there is a space. They are not close at all. Anytime you see these two indicators close to each other, you always see the market dragging. Okay, but when you see this space in between them, it's a move. It's a massive move. It's a massive move. So that is it. I don't intend this video to be long. Please do well to backtest what we are sharing, not on your live account, but on your demo account. Practice it, get used to it, then you can go over to your live account to trade it. If you have any question, kindly drop your question in the comment section and it will be attended to. In a subsequent video, we'll be looking for support and resistance, practically other blocks, and to see how we can merge all of these, and also divergence. We'll be looking for divergence as well to see how we can combine all of them in taking advantage of the financial market in trading step index offered by Deriv as a broker. So please like this video, subscribe to our channel, share with your loved ones, support and appreciate what we are doing on this channel, and also to join our community of traders. There's a link in the description box to join the Telegram group where we'll be sharing trade ideas, not necessarily signal, but a trade idea, so we can grow together as we approach the forthcoming year 2024. We are hoping that we'll build a group of successful traders. Thank you and see you in the subsequent video.